Okay, if Bitcoin falling down a few $1,000s is putting you into panic mode and depression, then you're not understanding crypto. Here's lesson number 1. Take a step back. Seriously, zoom out and look at how this chart progressed in its lifetime. We're at record high, above 100K, something many people have been dreaming about for years. Have you calmed down yet? If not, here's another lesson for you. Bull runs are never perfect run-ups. Along the way to the top, there are days where price action cools down. Look at the 2017 bull climb for Bitcoin. During the last few months leading up to the peak, nearly half of the days were red. And there were several pullbacks that pushed Bitcoin down more than 20%. Even in 2021, it was a little different because of the 2 major peaks for Bitcoin. But look, the months leading up to the first peak in April, similar story. Almost half of the days were red during this climb, and several big pullbacks up to 30%. Same thing on the way up to the second largest peak in November that year, which was the all-time high for the cycle. It's not just normal to have red days or weeks during a bull run, but it's also necessary. This gives the market a healthy break and an opportunity to correct itself before the next move up. And if you look at the most recent pullback on Bitcoin's chart, it fell just under 7%. Compare this to the 20, 30, or even 40% drops from the previous bull runs. Do you get it now? Do you get why you shouldn't be panicking when charts turn red for a day or even weeks? This is all part of the process. So now that you've hopefully overcome this mind game, what's the next big move in crypto? Where should we be turning our attention to? Well, the recent passing of the Genius Act opened up a massive opportunity for the crypto space, especially in the asset tokenization sector. There were already major developments here over the last few years, institutional adoption by major financial players like BlackRock, JP Morgan, and Goldman Sachs. The level of growth is clear. More and more value is being brought on chain through tokenized assets, now sitting at about $25 billion. And with the Genius Act pushing the digital asset agenda, all those trillion-dollar predictions for the tokenization sector are becoming more real. So the question now is, what about the tech to support this? Which projects are well equipped to be leading this space? We know Ethereum has been king of DeFi, and according to RWA.xyz, Ethereum is currently holding the majority of value in tokenized RWAs. But there are other projects building a foundation to take over this space through major partnerships, ongoing developments, and growing adoption. And one ecosystem that's building a reputation in the tokenization space is Hedera. Now, before you think this is just another video on how good the Hedera project is, we're going to look at the other side that no one wants to talk about. What might hold Hedera back from becoming an RWA giant? You all know that every project can be the best. And there are a few points of concern from the crypto community when it comes to Hedera. So stick around because we're going to pick this ecosystem apart. And while it's important to assess projects and their potential in the bull cycle, it's just as important to be prepared to make moves. Whether you're already holding a position in the market or you're planning to make the next move, it's critical to have the best platforms lined up and ready to use. I've tried many different exchanges and most of them were either slow or difficult to navigate. But WEEX has become one of my main go-tos. Everything on WEEX feels super smooth and fast. Deposits don't take long at all, so you don't have to wait around for your funds to arrive. And trading fees are super low. But if you use the link in the description, you'll get 30% off those fees, plus a chance to unlock up to 30,000 USDT in bonuses. It's free to sign up, so it doesn't hurt to try. And while it's good to have your top exchanges ready to use, staying informed with the right information is just as important. That's where the FireHustle Discord comes in. It's where I stay plugged into real-time updates, market shifts, and strategies that have been working for me. Whether you're actively trading or just navigating the space long-term, being part of a strong, informed community helps you move with more confidence. If you're interested in learning more, you can find the link down below. As always, none of what I share is financial advice. Please make sure to do your own research before making any financial decisions. So Hedera is one of the larger cap projects that attracted a lot of attention during the November rally last year. And part of this had to do with the first spot HBAR ETF application rolling in from Canary Capital. This was also shortly after a mainnet upgrade that took place, which brought frictionless airdrops and enabled smart contract updates for token fee schedules. This resulted in a more seamless and cost-effective token distribution system. And this made both the user and developer experience a little better. Now, you're probably aware of this massive climb that happened not too long ago, and after a cooldown period, we're now seeing another push up. The RSI and MACD indicators are also flipping to the bullish side and hinting at increasing momentum. But is there enough going on in the Hedera ecosystem to see another major climb? Potentially one that can outdo the price performance from the previous cycle? Despite all their enterprise goals and progress over the years, some major challenges have also come up. Let's start with one of the biggest pain points: Hedera has long faced criticism over the governance structure. The platform is overseen by a council which includes industry leaders. So big names like Google, IBM, and Boeing are all involved in overseeing the network operations. And this is fine if you consider all these major names pitching in to help fine-tune the ecosystem. But one of the most concerning parts about this is that the network nodes are fully operated by council members, which means technically the network is centralized to these major corporations. Now, the Hedera team does plan on moving towards a more decentralized system with community-run nodes. They even published this paper that outlines the different phases of their plan to reach greater decentralization. But last year, they posted about how this was removed from their roadmap to prioritize other developments. And as of now, there are no further updates on when we can expect this to happen. While we wait for some updates on when this node transition might happen, the Hedera team did make a different move towards more decentralization. They're a founding member of the Linux Foundation Decentralized Trust, which was launched just last year. This is a growing ecosystem for decentralized tech, and the Hedera team ended up donating their entire source code to this foundation, now referred to as the Hyro project. So this is a step towards true decentralized governance. And there's also the added benefit of opening up Hedera's network to developers and enterprises already involved in the Linux Foundation project. Another pain point for Hedera is their level of experience and adoption. Ethereum and Solana have spent years building their user base and ecosystem, but they've also battle tested their ecosystems with a massive influx of users. For Ethereum, this was with the DeFi boom in 2021, along with all the ongoing activity from that point on. And Solana went through a network explosion last year with all the meme coin launches and insane trading volume. Hedera hasn't been able to truly test their network with this level of activity. The network stats do tell us that Hedera can handle thousands of transactions per second thanks to their hash graph tech. But there hasn't been true real-world testing done. And then there's developer growth, which is still lagging far behind other major networks. If Hedera is setting out to build an entire ecosystem of apps and services, they'll need to attract more devs. So there's an obvious gap between Hedera and leading networks in the space. But this is also the case for many other large cap coins, which brings up a critical question. Will these projects actually be able to close the gap? And if so, which ones have the most potential? Well, I've pointed out some of the major challenges for Hedera, but there's also a lot of bullish momentum building up in this ecosystem. Over the last few years, we've seen Hedera get involved with many other parties to showcase their tokenization capabilities. For example, the HBAR Foundation's recent collaboration with StegX and ZonicX involved tokenizing over $100 million worth of real estate. They also implemented the ERC 7518 token standard that includes built-in compliance features like KYC and anti-money laundering. This is a framework that's suitable for institutional level tokenization. Another milestone was their partnership with Archax, a fully regulated digital asset exchange based in the UK. Archax has been using Hedera to tokenize a range of financial instruments, including part of Aberdeen's €15 billion money market fund. But what really caught people's attention was when Archax helped tokenize a US Treasury fund tied to BlackRock. To be clear, this wasn't a direct partnership between Hedera and BlackRock, but the fact that this activity happened through Hedera speaks volumes. Most recently, a British banking group called Lloyds Banking collaborated with Archax to explore the use of tokenized RWAs as collateral for foreign exchange trades. So clearly, this partnership with Archax continues to develop over time. But there's more. A few weeks ago, Hedera also joined something called Project Acacia. This is a collaboration between the Reserve Bank of Australia and the Digital Finance Co-op Research Centre. Their goal is to develop the Australian wholesale tokenized assets market, and Hedera's role is to provide a network for secure and efficient transactions. Remember how I was saying Hedera needs more real-world testing? Well, this is a great example of Hedera doing some battle testing. They also just integrated Chainlink's cross-chain interoperability protocol, unlocking new ways for tokenized assets to move seamlessly across blockchains. And while RWA tokenization has been a major focus point, Hedera has been spreading into other sectors as well, including AI. They're collaborating with Accenture and Equity Lab to develop a system for overlooking and verifying AI data. The goal here is to bring transparency and decentralization to AI-related processes. These moves show that Hedera is doing all it can to position itself for wider adoption beyond just RWAs. So what's the conclusion? Well, Hedera isn't perfect. There are some valid concerns when it comes to decentralization and adoption. But if you look at the moves they're making, especially in tokenization and enterprise collaboration, it's clear that this ecosystem is preparing for something much bigger. Whether or not Hedera ends up leading the charge in this next wave of adoption is definitely one of the ecosystems worth paying attention to. The pieces are coming together. Now it's just a matter of whether they can scale that momentum. What do you guys think? Is Hedera gonna lead the RWA space? Leave your thoughts in the comments below. And as always, none of what I share is financial advice. Please do your own research and understand these projects and narratives in your own terms. Don't forget to leave a thumbs up and subscribe to the channel. And of course, check out the FireHustle Discord group if you want to stay on top of the market shifts. You can find the link down below. Hope you guys enjoyed the video, and I'll see you in the next one.